What's up, guys? It's Sunday, November 12th. Wild week last week. Wild into the week here. Now that the market's back open, let's take a look at some things. Um, we are on the December contracts of E-mini futures S&P, right? Now this isn't on. If you look at other contracts, it's not going to line up the same way, right? It's going to be adjusted differently. But if you look at the December contracts, interestingly, this line here at 40, oh golly, 44.3250 was the top here. 44.36 maybe, I think it actually is. Whatever the high. What's the high of this candle? 44.36. That's what we're going to use. So I want you to take a look at this. Here's how I just thought I would kind of run over some things. Here's how I normally look at the chart. First of all, every pivot is important. It doesn't just reverse for a reason. It's either based on an algorithm, based on profit taking, or based on prior price action. So we assume that if it's done it in the past, it's going to do it again. If you look at the stock market differently, here's how I view it. Call me crazy, but the stock market is actually not going up and down. It's just testing price levels. Testing to see if it's like an if-then statement. If it gets to this number, then it's going to try to go to this number, right? It's hard to do because our emotions play with us and we want to be bullish, we want to be bearish. We have these desires. We want to see the market go up and break out and make new highs, for everybody's benefit in the world. We also want a correction so that we can get in on the bottom, right? But at the end of the day, rationality is not, the market is rational, but it's not rational to the normal retail trader or the retail or the normal, like, just regular investor. That's not rational. We had a pretty irrational day on Friday, right? And my computer's running slow today. I'm not sure what's going on here. We had an irrational day, but at the same time, it was completely rational based on, if you look at the market as just pure numbers and not up and down, but just testing levels. So we tested a level here at 44.36, and we saw that was important on the daily chart. You have support here, support. This is on a daily thing, right? We did get a little bit higher high, but you could argue that that's just a double top, right? So we tested the prior neckline of this Head and Shoulders, right? That's what this push was, right? It's a double top, double test, right? That's important. They ran it up on Friday because the sooner you get there, the easier it is to reject. And there's always a possibility that they can break it. So they were trying to squeeze the market to see if we can open up here on Monday. We haven't so far. We're actually down a little bit, just a little bit on Sunday night here. But I can't believe I didn't see this coming. But I do want you to notice the importance of where we are. We stopped right here. Look at this gap. We stopped right here. Now they gapped over it, and then they fell down, right? Right here, they stopped right here, and then they just gapped over it the following Monday, right? Look how important this level is, right here. This is just on the December contracts. If you look at other contracts, for some reason it doesn't work. Look at this support here. This one got below it a little bit, but they did push it back up. And then now we're rejecting here. They came up short here, and then they tried to pierce it, and they could not. Usually, here's the trick. if you've got lines on your chart of prior important price levels, and they come up short of your price, then usually the next time they get up there, they're going to break it. Because what they do is they play a trick. And again, we're on the weekly chart. But they played a trick. They broke up, went to test it, but they fell short, and they shook all those sellers out. They dropped the market. So everybody who wanted to sell right here thought, "Oh no, they're going without me," right? So what they do is they shake out the sellers by dropping the market lower. Does that make sense? So people wanted to sell at 44.36. They couldn't because they never got there. So their sell orders never got filled. So they woke up the next day and the market's down here, and they're like, "Oh, that hurts. I wanted to get out up here, and now I'm more red than I was. So I'm just going to sell down here." So what happens when they get to 44.36 again? The people that used to have orders over here are not there anymore, and then they can push higher. That's the whole point of coming up short of a number. So keep that in mind. One other thing I was playing with, this is kind of cool. They have, I don't know why I never really thought of this either. They have this like replay thing, right? So let's go to the monthly chart real quick, and we'll just run through it. And I want your guys' opinion. It might not work because my computer's running slow today for some reason. But here's how I would trade this, and I've forgotten what was on the left. I know we came down and then went back up, but I forgot exactly where. So let's see in a replay if we can decide what direction the market's going to go. And I encourage you to do this before earnings, because then you'll be able to tell, like, does it make sense that we're going to go higher, or does it make sense we're going to go lower? Anyway, we'll do a stock. We'll do NVIDIA here in a second. But watch this. And we'll leave this line here, I guess. Okay, so that's clearly resistance, right? We got above it. Oh, that's a lot of resistance there. It's going to start reversing. Oh, yeah, there it goes. Okay, so it's reversing now. Now this is going to be support. Oh, they got below support. Oh, they pushed it back up. It's going to bounce because this support. So it bounced. Oh, that's resistance there. So let's see if it comes back up. Because right now we're in a bear trend. This has now made the chart bearish. This made the whole rest of this chart bearish. This move. Okay, so they built a base now. They're going to attempt to break this line again. Okay, they broke it, so they can go a little higher. So are they going to get the new highs? Right here, they're going to get rejected. See this line? They got rejected. They got below the line. Now this should become resistance again, because that's there. Okay, I guess it stopped. That was the end of it. So I know that happened so fast. This became new resistance. So that's why this reversed. Now this is on a monthly chart, so you can't really pick exactly what day it's going to be, because they can always spike a number and then the next month come back down. So this is now resistance. This was our initial resistance. We came up, well, the line was the initial resistance. Then we came up here, we found more resistance. So when they get back to this line, there's going to be sellers here. And that's what they did. They pushed the market back down. Right? They prevented it from going higher. They got above here and they sold off. They got above there, sold off. Even on this here, at 45.75 area, they got above it, and the next month they sold off. So, that to say, this to me looks bearish. It looks like this whole chart is bearish. They came back, they were able to break out, but they weren't able to hold it. So when they come back to this initial resistance on this chart, this is only playing December. Like, this is if the stock market had never been existed until the middle of last year. If this was the only chart we ever had to go off of, this would be a short entry right here with an extremely tight stop, like the line could be your stop, because this was your original sellers. This is where the first sellers came into the market, right here. It broke up, came down, retested it. Those sellers still want to get out there. Broke up, got above that line. The sellers still wanted to get out there. Get back up to that line. The sellers still want to get out there. Does that make sense? We can do another one. What earnings are coming up this weekend? NVIDIA. So this is a crazy chart here. I don't know what's going on with NVIDIA. Nancy Pelosi's making bank. So if you were just to analyze NVIDIA from a monthly chart, let's even go to this. Let's go to a 3-month chart. If you were just going on a 3-month chart, you could obviously see both ways. So let's say the market started here. So this was our original resistance, right? So just like SPY, it came into resistance, got above resistance, and then sold off. But then right here, those sellers actually became buyers. They flipped, and that became support. So they got up to here again, and look, there were no sellers there. So those sellers are waiting for a higher level to get out. So they continue to push it higher because there's no sellers, there's no institutional sellers. And they get up to the top here, and we started to find some resistance. This is somewhat of a reversal candle, even though it closed green. So let's see if we can find a measured move. We're doing this for earnings. And this is obviously a guess, but you might have an extra 10% 10% advantage by using technical analysis for earnings. You basically want to see on the chart, where does the stock want to go? So this was the first resistance. Let's see how from there to here. So that would be a 100% move from resistance. From the first resistance to where we are right now, this resistance. So we had about a 50% move. There's 50. I don't know if you can read this with all my lines on here. I don't want to delete them because they've been important in the past. So we had we could say a 50% move, a 50% pullback, and then a 100% move, right? So it's possible that, I have my thing upside down here. Let me try it this way. So this is a bullish chart, right? We have higher lows, higher highs. 50% pulled back, shot up to 100%. The likelihood of them coming back another 50% is unlikely, but it is possible. What's more likely is they're going to go to their final target. I would kind of guess that they would consolidate a little bit more here, but you could argue that 6 months of consolidation is plenty. If you were playing this as a 1-minute chart, you could assume that we ran into resistance, tested it for 2 months, and still closed the candles green. So I would say their final target is 738. We'll see. 738. Now, that sounds crazy, right? That sounds crazy because this stock has moved, I don't know if you look at the daily chart, it looks absolutely stupid. But if you zoom out on a 3-month chart, yeah, so yeah, we've had plenty of consolidation here. And now it looks like we're breaking out. I think it can still go higher. I don't know. So rationality is not logical. It's rational. It's, if that makes sense. Like, it doesn't make sense to the normal retail person, but it makes sense on a larger level. That they ran up 50% move, pulled back, made a 100% move, consolidated, and they can keep going. It's possible that they pull back and do another 50% move, and if they do, that would be a good place to buy for long-term investing, because that just means they're pulling 50% things. I would assume they're just going to blow it up. They're just going to just blow up the stock. So they're going to go to 1.618 and then blow it up. And that'll be the end of the Nvidia move. But anyway, just because something looks crazy doesn't mean it's irrational. So saying that, we have let's take the bull case for S&P here. Now the month isn't closed, or the quarter isn't closed, obviously, but we talked about the 100% move here and 50% pullback. Oops, that's not what I wanted. This one. So 100% move, 50% pullback. So this one's a little different because this is upside down Nvidia. Because Nvidia made a 50% move and then a push higher, right? Whereas this one's more like it already made the move, and now it's done. It can still push up here, but I'm thinking Nvidia might go higher, but the S&P in general is done for. You can argue right now we're on a green quarterly candle. That means anything under this line is going to be support. Sorry, this is moving so slow tonight. You could argue that this is all support. These are all buyers hiding under this line, right? But it's still, I mean, it's just the beginning of the quarter, so. Oh, that was this breakout. So I guess that's a little bit bullish. That was the bottom that we caught. The buy spy no matter what. See how this was on a monthly chart? Dropped down here. This was resistance, came back, retested it, and now it's support. So yeah, it's possible. Let's say this. If they happen to get above I'm not on the right ES chart. I need to be on December. If they get above 44.36, that opens the door for a move like this to 45.75, right? If you look left, you could argue this was the move. 45.50. That was 45.75. This one came up a little short. 45.35. So the rational thing would be if they get above this line. Remember, it's all an if-then game. If they get above this line, to be safe would be 45.30. Didn't I say 454 a couple weeks ago? SPY 454. That would be close. It'll probably come up short of 454. The other thing we have, though, at the same time, if we don't get above this, if we get above 44.36, you can remain bullish for a little bit. If not, let's see where the sellers are. You could say this was the first initial move down to here. Let's change this one to red. Can you see that okay? I have horrible eyes. That's why everything's super bright neon colors. So you can say from this move, they pulled it down even farther to here before they found support. So the expectation would be at minimum to get down to here. And that would put in a head and shoulders. You see that? Clean this up a little bit. See that head and shoulders? Now that would take some time because you're going to have a lot of buying pressure up here. So it's going to be a mess. It's not going to be quick. It's going to look like this. 1, 2, 3. Likely that would be support. Look at this. You got, oh, see here, they came up short of this. Look at this. Look at this. Resistance, right? Resistance. Support. So this is the beginning of the move here. This was a nice slingshot. We caught that a couple months ago. That was fun. So this is our line from here to here, at least, if not a little bit higher. But we'll say from there to there. So you can see there's a liquidity gap. They're trading here and they're trading here, and there's not really a whole lot in between. That's how we move so fast through that, right? So head and shoulders would be from here. They came up short right there, but they did hit it. They did come down and hit it. They tried to come up short, and then they tried to break it, and they still wouldn't break it. So they held. Then they did come back down, and they closed below it. That became resistance. See how these candles are underneath this line? 42.70, and dropped it a little bit farther, and then ripped it back up. Now we're back at this line. So it might take a week. It might take a couple days of chopping around this line, getting over it. Every time it gets over it, I would try to short it. Try to short anytime this gets too high on here. If it gets above like this candle, this candle right here, high of 44.47. Let's put a line right here. At 44.47. We're going to call that our short line, 44.650. 44.4650. Try this. And make a 20-cent stop loss or something crazy, like super short stop loss, and just to see if it works. But anyway, so all that to say, I'm expecting a move back to this 42.70. That is our target for the next few weeks. 42.70. Unless we can close a day above 44.47. If we can close a day above 44.47, then look for a move higher. But otherwise, every time we get over now, okay. Oh yeah, sorry, you guys don't do that. Let's look at SPY. I already got the numbers on here, so let's just use these. And see, this is a different candle. This is a different candle than on futures contracts. So in this candle, we already closed above it. Our number was 440.61, or yeah, 440.61, that would have been the short entry, right? So if they get much above that, we could put another line right here. See this candle and see this candle? See how right here this was support and then it became resistance and resistance? Any time we get over 441.20, see what was the actual open here. 441.16, 441.18. Let's make it 441.18. Anytime we get over 441.18, because they'll probably try to run a test of that, take puts with a 20-cent stop loss and see how you do. I'm going to make this a big line. Let's make it yellow or something. How about white? So I remember it's important. 441.18. Anytime we get over that, buy puts and see if that works. Make sense? And look for a head and shoulders move back down. See, this is different. This chart is different than futures. See this head and shoulders? Look at that. Can you see that? I got too many lines going on. Look at this head and shoulders. There, 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 there. 425 area. That would be prior support. Look for a move to 425 on SPY. Let's look at Meta. I don't know when their earnings are. They already had their earnings. But check this out. This is a monthly chart. So far, they have failed every month to close above this candle. This was the original monthly breakdown candle resistance candle. I mean, they did, but they got immediately rejected. They got above it and got immediately rejected. Now they're way above it, and they're testing. What's the high of this candle? 328 is the high of this monthly candle. 329.10. Anything over 328, you should be able to short. I kept trying to do it down here because it looked like it was making a pretty nice top, but here's what I would look for. If you want to be safe, here's what I would look for. Here's your channel. Watch for a re-entry. Look how they tricked everybody. They broke down and then they saved it, and so they ripped to the other side of the candle channel. That's the same thing they did with SPY on Friday, right? Look for a re-entry of this number. If they bounce here, you could actually look for long or a little bit and see if they can spike this 332. But watch for a re-entry into this channel for a large move down. So keep your eyes on Meta. Nvidia earnings, I kind of like long. Just for whatever. Meta, I like short. We talked about Kellogg short the other day, and we never came back to it. Let's see where it's at. Oh, it had earnings. It popped up for earnings. It's going to run a test of 55 again, so maybe we'll give that a little bit more time. Yeah, I don't know. You can start getting into Kellogg short if you want, whatever it's called nowadays. So that one's still good. How about one that I haven't looked at yet? Coke. What's Coke doing? It's been a long time since we looked at this. So here was the head and shoulders. Hey, watch this. I want to show you how rational the market is. I've never done this. I'm just going to do it with you live. So here was the peak. Oh, it's not what I wanted. This is what I wanted. Here was the peak of this head and shoulders. Here was the trend line. So we got 65 to 55. So $10 move, right? Look what this did. So we were expecting a $10 move higher. That was originally the plan when it broke out. Instead, what did they do? 63 to 53. $10 move. They finished. They completed the head and shoulders. They just did it in the opposite direction. Equal opposite move. It's pretty interesting. Hey, look at Coke. This looks good. We got some buyers down here. We got support level right here. If you want to start considering Coke long again, the head and shoulders is done. That means it can move on to the next pattern. So it's kind of a weak candle though. I'd say if it comes back down to this area, see how this was monthly support, around 53.60 area, start adding long-term shares into Coke. Yeah, look at this on the 3-month chart. Nobody really looks at 3-month charts, quarterly charts. But talking about quarterly chart, let's use a clean ES chart and let's see what this looks like. As you can see, we're still in a bull trend. We have broken it a couple times. We did break it there. One interesting thing to try is to look at, this isn't my idea. Let's go to the quarterly EMA. Now, in the past, the Federal Reserve, every time we closed below this purple line, the 4-quarter moving average, the Federal Reserve bought the market back up. The Federal Reserve bought the market back up. They really bought the market back up to close above the purple line, right? For the first time, we closed below it, and we closed below it again. We closed below it again. That was 3 quarters. They closed below the 4-quarter moving average. That was a recession. They didn't declare it a recession, but it was. Look at this. Last time that happened. See, they get below the line, they buy it up. They get below the line, they buy it up. 1, 2, 3, and then the 2008 market crash. Right? That's what I was expecting. So now we're back above it, and you can see they're trying hard to stay above it on this candle. If they close below it, that would confirm to me that we're still in a recession. So keep an eye on that. The 3-month chart with the 4-quarter SMA, simple moving average on there. Let's see if we close this quarter red, and keep an eye on that. If we do, that's going to be followed with follow through, because remember, the Fed is not buying. They tried to buy this one. Probably the Fed didn't. I think retail tried to save it, and they couldn't. The Fed's not buying here. The Fed didn't buy here. The Fed is not buying here. Banks are buying, but the Fed is not. So keep that in mind. The open of this candle was 43.93. Let's put a let's just say if we close under 4,400, look for a continuation down for another move down. And it's possible that, this is just going to be junk for the next 6 months, and we're just putting in a top and then can go higher, some kind of wedge type thing. We don't have to crash. We could also have an equal opposite reaction, like I said on Coke. Instead of having a move like this, we'd have a reversal move. The bottom of the market would be somewhere around this area. If you look at the quarterly, that was our first major resistance candle, and they held this area. So 2,500, not 35, 2,500 would be around the bottom of the market for the S&P. So that would be a heck of a move to catch that. It's going to take a while, but definitely could see that happening. This looks like our chart that we looked at last week. Run up. Oh no, everything's okay, and then the rug pull. Right. Look for 2,500 S&P. I'm just rambling at this point. Next week we got Fed. Nothing really important. Tuesday, CPI. If we're over, what did I say, 41.20? If we're over SPY 41.20 on close on Monday, get puts on Monday night going into Tuesday morning. Then we have PPI, that could be a reversal there. Other stuff. I don't see anything that important. Real quick, let's take a look at housing, see how that's doing. I closed my long positions, but which is a good thing, because so here again we're at the 3-month chart, quarterly chart, with the 4-quarter EMA on it. And what did we do? We closed below it. We closed above it here, and then they got rejected at our line, 86.38. Can't make that up. So now we're back testing the support. So it's possible that my bullish reversal idea was short-lived. See how this, let me zoom out. See how this area, 70, 71, they were buying all the dips under 71. Buy. They got below it. The expectation was at least some kind of bounce. So we're getting some kind of bounce here, but now this and this has become resistance area. So, if housing loses $70 VNQ, look for a really quick short in the housing market all the way down to this 46 area. I think I was expecting a move back up here, but we haven't gotten it yet, so we'll see. But keep an eye on VNQ this week for short plays. Meta short, Nvidia lottery long for earnings, and then if somehow we were to get to 700 on Nvidia, you could go ahead and just grab short shares and just hold them for the next 10 years. And you'll see that stock back around $60 someday. Apple, still waiting for that one to come back to test 85. Here's the 3-month chart on Apple. Now look at that. They're saving this one, but it got close. Here's the 3-month chart of Apple. They've kept this up. Here's the recession. You had 1, 2, 3, and then they ripped it back up. Now we've got retested it now, and we got below it. So right now they're holding above the moving average. Looks like the moving average is around 79 or 79.21 level. So we'll see what happens there. Right now it's holding. It already had earnings, so I'm not worried about that one. We'll see. If Apple were to come down and close below 179, look for a short there, back to 85, 81.92 to be exact. Boom. And then rip your face off rally. Buy Apple at 82. I don't know. I'm done. Bye.